Good morning and welcome back to Almus Market Mornings. The headline today is that the big, beautiful bill was passed by a vote of 218 to 214 by the House of Representatives and now heads to President Trump's desk to be signed. An interesting point to note is that to block the final vote on the bill, the House Democratic leader, Mr. Jeffries, spoke for 8 hours and 45 minutes, breaking the record for the House's magic minute floor speech. Primarily after this update, along with yesterday's strong job market data from the US, there was a slump in treasuries, short end of the curve moving higher, 2 year up almost 10 basis points, and dollar initially gained but cooled off later on. Good morning, JK. Big updates coming in from the US. What's your key takeaways from yesterday's updates?
Good morning, Swaraj. So, yes, I think there's quite a bit yesterday to digest for the market, and particularly the job market report. The monthly jobs report showed that the non-farm payrolls were much higher at 1,47,000, while the market had expected only 1,10,000. Some whisper numbers were even looking for a much weaker number, and this number came as a big surprise to the market. And of course, this new employment or the higher employment was mostly concentrated in a few sectors. So that way it is slightly skewed. But on the positive side, I would say there was an upward revision to the previous month's number. And also, the unemployment rate has gone down to 4.1%. Again, that is a positive. Wage inflation was lower. Which means it can be seen two ways. The employees are losing their bargaining power. That's one way because the employment is weak. Otherwise, you can also say that it's a lower, inflation, or rather the growth without much inflation, which is kind of a Goldilocks kind of report. It's a very limited perspective only from the job market point of view because we have seen many other numbers coming actually very weak as far as the US is concerned. So this comes as some relief to the market because we also had in the lead up to the report many numbers which were indicating that the employment number could be weak. ADP private jobs was minus 33,000. Now actually ADP number is losing its credibility because the correlation is getting much negative. Put actually kept the market interested not interested in buying more treasuries. We saw the yields go up instantly and the dollar also recover somewhat. Following it, we also had the ISM report on services activity, which came slightly better than expected at 50.8. The details showed that while the employment index was in contraction territory, new orders had a big leap and the prices paid were also easing. So, one thing this is seen as a slightly positive report for the US. Factory orders jumped by 8.2% and this was minus 3.9%, giving a sense that maybe the manufacturing is again starting to receive some boost. However, we had seen quite a few negative reports, or rather underwhelming reports in the past few weeks. So we need to wait for more numbers. So from economic news point of view, it was a good day for the US economy, and that was taken by markets with both hands. From the tariff side, there have been quite a few indications only. There's no specific announcement. Now, Trump is indicating that it's so complicated to sign a trade deal with 170 countries within short period of time. So he's probably going to propose a basic reciprocal tariff of around 10% for about 100 countries. This can be some sort of a relief, but we still need to see what details and whether it will actually be so. But in the meantime, Besant also said, say, Treasury Secretary, that there are quite a few deals lined up to be signed before the deadline of July 7. From India's perspective, it is just rumored that we are inching towards closing part of the deal, and it can be entering a crucial phase, no doubt. So that these updates, of course, have been giving some relief to the market. If you look at the yields, they have gone up 20 basis points for both 10-year and 2-year from the lower seen recently. Yesterday, it was a jump of about 7 to 8 basis points in both, and more particularly the near term, because that is an indication of what the Fed is going to do. Now, if you look at July expectations, slowly the expectation was building up for a cut up to 25% probability, looking at the recent week reports, but that slumped to 5% yesterday. And even the full year cut, which was going near 65 to 68 basis points, which means around 3 rate cuts, has now come to around 55 basis points, which means we can only 2 rate cuts, which is in line with the dot plot that Fed published along with their Fed FOMC meeting last week. That gives some boost. Rather, it boost to the yields and also boost to the dollar. And the stock market, of course, has continued the stellar rise. Dow is now catching up with the S&P and Nasdaq to closing on all-time highs. Nvidia landmark 4 trillion was touched yesterday, the most valuable company by market cap now in the US. So, host of positive sentiment in the market. Economy not doing as badly as expected, although we need to see more consistency of improvement, and tariff, probably some relief coming in the way in the coming days. And as I said, the beautiful spending bill also is passed by the House and gone to the president's table for his signature. And this, of course, is going to give some more boost to the markets, because the tax cuts proposed for companies, and also the spending cuts. Spending proposals are mixed, because there are changes to the provisions made for energies. The traditional energies are getting a boost, whereas there are cuts for non-traditional energy sectors. And as far as the spending cuts are concerned, we are seeing some Medicaid getting in some reductions, and this may not be popular politically, but overall these numbers, if once passed, will lead to a higher deficit, no doubt, in the in the near future. And even the Treasury Secretary was voicing it that in the near term we could see these spending remaining higher, and that could keep the rates higher as well, and could put more pressure on the finance cost for the Treasury. However, he also said that by the time Trump's the term ends, they're looking to bring down the deficit to 90%. Market will take that with a pinch of salt, because the way the proposals of spending and tax cuts are being proposed, it's actually going to lead to higher debt of 3 to 4 trillion. All the same, there was some relief rally in the dollar, which had been going down, has gone down by about 13% this year. Euro went down by about 0.5%, and most currencies also gave up their gains, and the dollar was ruling strong, including against the gold. Yes, it is still consolidating, because market views are mixed, because many in the market don't want to go by just one report. And the jobs market report is always viewed with a bit of skepticism, because many times in the later months you get revisions, downward revisions to the previous month. So that's also something that the market will not ignore. All the same, today being US holiday, market will have time to reassess, go into the much more details as far as the report is concerned, and also to keep speculating on what is coming about in the on the tariff front, with the deadline just now about 5 days away. On the rupee front, yesterday we had some renewed strength on a rumored FDI flow in the market, and importantly, absence of usual buying in the 85-40 regions by the PSU banks led to panic stop loss selling by interbank players, and also some selling by the exporters, because 85-40 was holding the rate for quite some time. Reports that India and US may be close to signing a trade deal was another factor that triggered the sell-off in the USD INR, with a low of 85.20. where again, of course, PSU banks came in and bought. Market was also not keen to sell dollars at the lows, of course, as we are heading into the long weekend in the US. And all important monthly jobs report was ahead, as well as the tariff issue. Stronger than expected NFP number and lower unemployment report, leading to a sharp recovery in the dollar, and even USD INR recovering to 85.50 later. Could be maintained for at least till the issues are finally seeing some sort of a firm decision. In the medium term, we still have INR's bias to strengthen based on strong domestic fundamentals, but PSA actions and nervousness on the US policies will keep any large moves in check. Definitely, a possible higher recovery from the US dollar, which is technically looking possible, also might keep the downside checked on the UFC INR. All in all, I think this promises to be a quiet day and possibly preparing for much more volatility in the next week. Thank you.
Thank you, Jackie. And that was a detailed coverage, and we are broadly looking at a possible extension to the mild dollar relief rally that can also keep USD INR in check. The USD INR yesterday broke 85.40 and moved lower and made a low of 85.20 and recovered since then after the NFP. Uh, it might be a quiet day today because it's a dollar holiday on account of July 4th, so there won't be any outward dollar purchase transactions that can be done on for the value cash levels. That's it from us today. Thanks for listening. Have a very good weekend. We'll catch up on Monday with a fresh round of updates.